Friends, in this video for I Thought Wealth, I am going to talk to you on the topic personal investing versus professional investing. Professional investing comes with very clear, well marked responsibility. At the end of every month, a fund manager has to give his performance in the public domain and has to make disclosures to every client who is associated with him. So, at the end of every month, he will be measured, judged and evaluated. Naturally, an investment manager as a professional has to always prepare himself for every month, and he has to undertake actions every month that will subsequently pay off in the following months. So, it's a continuous exercise of care, caution and consistency. You try to do all this, and yet the markets could ignore everything you do for longer than you expect it to. Now all this will be judged in the public domain and people will form all sorts of opinions based on what they see. Obviously, they will not see what the fund manager is doing to produce future returns, because that will show up only when the actual returns are going to happen. On the personal front, you don't have these pressures. You are going to answer to yourself. You are not going to answer to others. Also, you have the luxury of setting a time horizon much longer. Now, I bought some shares in 2018. These are not listed shares. In 2023, I am in no hurry to discover the value of these companies. I feel that there is still time for these companies to do what they can do for my portfolio. So the valuation of these investments are strictly notional and often theoretical, because you are not trading to discover the value like the stock market is doing for you. Effectively, in one's personal investing, you have numerous choices and you have numerous liberties which you can take with yourself. But as a professional investor, this is not possible. You cannot take a single liberty professionally. You should have made a clear promise to the investor and you must work month after month to fulfill that promise. There is also the important responsibility of how you work with the investor. Now, this is the tougher side of professional investing. Because in personal investing, you are only managing yourself. You are working with your own psyche, your fears, your greed. You are addressing what you feel, which is in your control to a better extent. But when you are wearing the hat of a manager with another person, you cannot control what that person feels. However much you try, that person may have his own fears and he may have his own reasons behind those fears. None of it connected to the way you are managing his investments. They may be due to his life circumstances, which you have no control over. Yet, you have to deal with it as a professional. So, being a professional investor comes with a lot of activity, baggage and transactional responsibility. You need to be ready to fulfill them at any point in time, whenever the need arises, without delaying and ensuring that the issue is totally addressed. As a personal investor, you can completely postpone these things. You need not look at your portfolio for 6 months or a year if you don't wish to. But no professional investor can avoid looking at the investor's portfolio with striking regularity. It has to be done that way. So when I see that I have done very well personally in 1 month, it's not going to excite me or make me feel sad, or it's not going to make me react. But when I see the same performance in an investor's portfolio, the investor will react and he will react to me or with me. And I will always have to be prepared for those reactions, to accept positive reactions and negative reactions with the same sense of responsibility. Dealing with client reactions is one of the most important roles which a professional investor plays. And you play this role all the time. You have to deal with expectation setting, you have to deal with performance evaluation, you have to deal with review, and you have to deal with them whenever you call them to further investment actions. A lot of a professional manager's time goes towards this because many times the investor is unable to deal with himself, and as a result of that he doesn't deal you well, or he doesn't deal you in a way which is good for him. But you still need to ensure that whatever engagement happens between you as a professional and the investor who is your client, that engagement remains professional and outcome oriented and focused on what is good for him. You can't move away from that irrespective of how the investor behaves. So you need to condition your mind to accept his idiosyncrasy whenever it presents itself, and you must be conditioned not to let your idiosyncrasy affect him when you are in that phase. So a professional investor's life is a lot more rehearsed, a lot more sobering, a lot more slowing, and a lot more activity oriented. But my life as a personal investor, somebody who does investing for myself, need not have all this drama. One can do the investing with far less drama. So I don't need to worry about how much returns happened every month for myself. But I can't say the same thing when I play a professional role. Most investors who are obsessed about monthly performance tend to be ignoring what they need to do for their long-term performance. Generally, investors who are not so obsessed about monthly performance take advantage of every opportunity that comes their way, and that in turn improves their long-term performance. This is my experience as a professional investor dealing with clients. As a personal investor, I don't worry about the returns at all. I keep on investing whenever opportunity is favorable and I have liquidity. Often I create liquidity just to do this. Now, the investor who knows how to deal with the professional investor tends to perform better than an investor who doesn't understand how this engagement should work. I say this with total responsibility and confidence. It's the same thing with the investor who doesn't know how to deal with himself. Suppose you don't know how to deal with yourself, you're not going to do well. In that sense, the professional investor who is working for you is doing what would otherwise be your own job. Once you internalize that, then you will start respecting what he is doing and start seeing value in what he is doing and start getting value out of what he is doing, because all this is eventually being done only to get the best value out of your manager or advisor. So these are some of the thoughts that I wanted to place before you, because many people think that we wear different hats as professional investor and personal investor, and that these hats are chosen in such a way that you treat yourself preferentially and better, and you treat your professional clients differently. That is not true at all. In fact, from my experience, that professional responsibility comes with greater risks and more attention. They demand more work out of us, and they keep us busier than ever. One's personal investing need not be as demanding or taxing. Thank you for watching this video.